Well, many thanks. We are now joined by the CEO of Kenya Airways, Buvi Gunze, to speak to us about how the airline has been performing and what is in the horizon. You've been in the red for some time now. Is the story changing?
I think we've got to take heart, because even in the midst of all the difficulties that we've been going through, we're still flying daily, carrying more than 10,000 passengers every day to various corners of the world, serving that guest who's relying on us for that service delivery. And I think all credit in a difficult situation that we are serving this audience. So what are we doing? Three things in the turnaround. And 6 months ago, we were sharing it as a plan. Today, we can see that plan coming into deep fruition. The first thing we said is that we are looking towards closing the profitability gap, because we have made losses and we need to narrow that loss. Number two, revisiting our business model to make sure that it is competitive and that we are competing at our position of strength. And the third thing, how do we create a sustainable financial structure for this business? And each of those things we are now executing. If I say, for example, reducing the profitability gap, in this period, we have closed quite a number of deals. For example, reducing our fleet costs. Yeah. We've sold aircrafts, we have subleased others, and combined, those will be saving us from next month $8 million a month, 800 million shillings a month in terms of fleet costs. Mm-hmm. Combined there is revenue targets, there's cost targets. And so we are now at the point where the execution in earnest is actually happening.
In short, where you're headed is you're likely to see the airline landing in profitable territory. And how long will this take, Mbuvi?
I think it's important to recognize that it's a marathon, not a sprint. And as we turn around the business, we will come back to profitability in time. I don't want to assure or promise to say it will be tomorrow. Yes. Let us prove it by our actions. We are right now at the end of the review process of our preparation of our budget and the bankable plan. Yeah. That plan is going to be challenged by our investment bankers, PJT, who we appointed last month, who will be going to market to try and raise long-term money. When we go through that process of challenging, at the end of April into early May, we'll be able to give that forecast to say, in our view, we will be net positive by a certain period. But the point for me is to say we are in a good trajectory. If I look at the operating results for the year, if you recall at the half year, we showed you that the operating profit line, the loss had reduced significantly, even though we were still making a loss. And that trend should continue to the end of the year. What will impact us is, of course, the fact that we have a big exchange rate movement during the year. We still have some fuel hedges, and we're paying a bit of interest cost. But the story from an operating profit point of view is that there is remarkable improvement.
Mm-hmm. Of course, just to walk our viewers back to time, you did report a loss of about 25 billion shillings, one of the biggest in corporate Kenya. Perhaps the biggest question now is, looking at the stock markets, the share price has fallen significantly. It's now trading at about 4 shillings. How are we likely to see this turning out when this particular strategy comes into fruition?
So the shareholders will judge our efforts, and I think, people vote with their money. The important thing from where I stand as CEO on behalf of the board is that we are putting in the right foundation for making sure the business comes back to a sustainable position. Yeah. When we convince our shareholders that that position is actually changing and they will see it through our actions, then it will start translating into share price. Now, later in the year, we'll be coming back to those same shareholders and telling them, we need you to put in more money. They need to be convinced that we have a story for the future. That's the story we are building right now as part of the turnaround. And the milestones that we have achieved so far already convinced me that we will be able to give them that solid assurance that can then see their share price based on their own assessment coming back.
The recent decision was to sell off your landing slot in London. Perhaps, how is this going to impact your books?
So when you're in a turnaround situation, I think that the important thing is that everything must be up for assessment. And what we did basically is we monetized an asset. similar to sale of aircraft, similar to sale of land. We had an asset that could fetch money today at a point when we are going back to our shareholders, when we are going to the banks, when we're going to the creditors to ask them for money. So we actually monetized an asset. So obviously there will be some P&L impact of the gain on that in our bottom line this year and next year.
If you look at the other airlines across the countries, there is some level of ownership where government owns a majority stake. If you look at the KQ story, it's a bit different business model. And do you think this business model is sustainable in times when we are seeing highly subsidized airlines competing with Kenya Airways in the same sort of niche?
My sense is that it's not about whether you're owned or not. I think if we are all clear in terms of the policy space that we're operating in, then ownership really doesn't matter. It's about how you align that policy and how you drive the what I would call system-based competition. You know, take things like infrastructure. Infrastructure has a direct impact on the operations of KQ because we can either attract people to come through our hub or detract people from coming through our hub. The policy in terms of market access can also have the same. So I would say it's not necessarily about ownership, but it's about how do we align. And I have seen we've had a lot of conversation in the last year about driving that policy alignment. And I see that now we are coming, you know, we have a much better understanding.
The business seems to be getting back on its feet. And what would be your message right now to the employees?
We speak to our staff every time. In fact, even last week I wrote a note to the staff just updating them on where we are on the turnaround. The important thing to note is that they know that we are going through a turnaround. They know that there are some tough decisions that we have to make in relation to people because as you're resizing the business, there will be some people decisions. But they know also, and we've talked about this, that when we are ready to talk about those decisions, we will come to them in a respectable way because there are channels for that conversation to be had. And we said that by the end of the month, in the next 3-4 weeks, we will be ready to have that conversation. But they also understand that those are difficult decisions that we'll have to make. And the staff have told us, hey, listen, please come and tell us. Tell us when you're ready because we don't want to be in this anxiety position. But they understand that position. To the traveling public, I would say, you know, KQ has been serving you and continues to serve you even in difficult times. And we require the support of Kenyans, we require the support of East Africans, we require the support of Africans at large because this airline is your airline. And I fight for every passenger possible to come on KQ. I'm price competitive, I'm trying to give the right level of service, and I'm trying to give the right level of engagement to make sure I attract you on board. For us, our clear brand essence is driven by the words warm, caring, friendly, truly African. That's our brand positioning from a customer experience point of view. And it's what my team and I work hard every day to deliver. Of course, we will not satisfy everybody, and there will be feedback that we get, but that's a brand essence that we try to deliver, that you feel that warmth coming through, that radiation, and that's a service offering that we have. I can't be the same as Airline X because I'm positioning myself differently, because I have to differentiate myself. My promise to the guest is always around on-time performance, and we measure it every day. I look at the statistics I can look at the statistics even on an hourly basis. So it is something we focus on. And by the way, when you look at the international statistics of on-time performance, even in the region, we are right up there with the best. So it's important to understand there will be disruptions in the airline industry.
Yes.
KQ has disruptions, and particularly since you see us in our hub. The important thing is how do we recover from them, and how do we communicate to you, the traveling guest, to ensure that you understand what the issue is.
Allow me to bring in the elephant in the room, the issue of financing KQ. You've seen the airline has been in talks with the government to sort of get some what they call quote-unquote bailout to be able to drive the airline's expansion strategy and also the turnaround strategy. If you're to give us a breakdown, how much have you received so far and what areas has it gone towards in the running of the airline?
On lending to us. So when we talk about a bailout, what the government is supporting us is really acting as a conduit for that borrowing into KQ. That borrowing, which we said we needed a year ago, of another 10 billion, is to go to reduce our creditor liabilities, to really manage our working capital, and to prepare us for the long-term capital raise, which we are starting now as part of our turnaround.
We navigate around this.
We have to keep on challenging our government and the policy makers to say, hey, listen, don't make us uncompetitive through some of the decisions we take, which are Kenya-centric, but remembering that we are also operating in an aviation space that is international. Because if I have one tax that my competitors do not have, then it presents a problem. And those are some of the things we're engaging with government on continuously. They're big. I mean, if you talk about VAT, at one time the government owed us $40 million in terms of VAT refund. That's a cash flow impact right there.
Yeah,
but I must
say,
thank you.
Chief Executive Officer